Hello, Sarah Bear here with another Tax Tip Tuesday. And so today I'm going to talk about document retention and what types of documents are you required to keep as a small business owner. I get this question a lot from my clients. So yes, you are required to keep your bank statements and your credit card statements. Those definitely are necessary for us to do accurate accounting, or if you have an in-house bookkeeper or CFO, for them to do accurate accounting for your records. But you can't just stop there. You actually have to keep your receipts for your expenses. You are supposed to keep them in case you are audited by the IRS and you have to prove that the expense that you incurred and the expense that you're deducting on your tax return is an ordinary and necessary business expense. So that is the definition that the IRS requires you to meet in order for you to be able to deduct that on your tax return. So let's say, for example, that you went to Walmart and you bought some office supplies for your small office. So then you lost the receipt, but you went ahead and claimed it on your tax return because it is a business deduction. But the IRS audits you and they look at that credit card statement and they see a deduction for Walmart. They're probably going to disallow that if you don't have the receipt that shows that you actually bought office supplies for your office, because you could have went to Walmart and bought groceries for your family and they don't know the difference if they don't have a receipt. The IRS might be more lenient if it is, let's say you're an HVAC contractor and you go to the local supplier for air conditioners and you have a charge on a credit card at the local heat and air supply house. Then the IRS might be a little more lenient if you don't have that receipt as documentation that you bought a $5,000 or $6,000 air conditioner. They might be more understanding for that. But there are some places they probably will not allow you to deduct the expenses because you could have bought some personal items and without the receipt, they don't know for sure. So definitely do keep your receipts. Now, the problem is that with the receipts that are kept, a lot of times I have some receipts here. So a lot of times these receipts that come out from the cash register, whether you're eating a meal or at Walmart or Office Depot or places like that you go, these are heat, can't think of the exact name of them, but they are heat generated, and so when they get hot over a period of time or just a period of time in a file cabinet, they are going to fade. So I had a client go through an audit several years ago, and the audit was for like maybe 5 years. Prior to that, all of their receipts like this had completely faded. They had kept them, but they were faded and you couldn't read anything on them. So the IRS agent could not use those receipts. So what is the best method of keeping your receipts? What I recommend to my clients is to keep an electronic copy, preferably on cloud storage, so that you capture this receipt and it's frozen in time and it's not going to fade. And if your computer goes down, you have an online backup of that receipt. So there are all sorts of apps out there that you can download to your phone where you can take a picture of a receipt and store it electronically. They're, one of the easiest ones, the cheapest ones would be something like Dropbox. You could take a picture of your receipt and store it over there, but then you're going to have to name that document and sort it by month. There are also some newer apps out called like Expensify or Receipt Bank, and they actually have OCR technology where when you take a picture of your receipt, it reads the name of it and the date and the amount, and it saves it according to the information off of the receipt. It can even incorporate with your software like QuickBooks and automatically put it in there for you and put it in the correct category. So there's all kinds of great technology out there now. The main thing that I wanted to point out in this video is that you do need to keep your receipts in case you are ever audited. You need to be able to prove that there is a business purpose to that expense. Also on meals, just keep in mind it's 50% deductible. Entertainment is not deductible at all, but meals are still 50% deductible. You do have to have the date of the meal, who was there, and the business that was discussed at that meal in order for it to be an ordinary and necessary business expense. Thanks so much for watching and join us next time.